Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Wednesday, April 10th. The NASDAQ market did give us some of the follow through that I was looking for. As we talked about before, on Friday we had buyers coming in. Monday gave us some follow through. Tuesday is the right kind of behavior. However, there are challenges to this market. I talked about it in the advanced video that we need to get through. The next 3 days are important for us, and we're going to be monitoring that very closely. It has an impact on the longer term approach to this particular market. When it comes to the currencies, I'm looking for a weaker dollar, stronger currencies, as you see here with the euro. And I'm looking for this type of behavior to continue. Again, it's at a critical level. Today, I think will be very important for the euro. In the interest rate markets, I still want to see weakness there. We saw some selling coming into the latter part of the 10-year note, and we also see it in Treasury Bonds. Now, it did trade below this bearish level. And the difference between the bullish level and the bearish level here for the 30-year Treasury bond is 199 ticks. And each tick is worth $31.25. So that means the dollar value of this change would be $6,218.75. Now, I'm not suggesting that you would get that type of return or that you should do this type of trade. But what I do want you to understand is the magnitude of change when you look at these markets per contract. All right, and I'm still looking for weakness in that market. I'm looking for strength, though, in the gold market. Today's also an important day. We're looking for a rest day, a sideways type day, but we want to see buyers maintaining control. In the energy market, the market did trade back up above this bullish level. And the difference between the bearish level and the bullish level in that market is $1.85. Now, in the full-size contract, each penny in this market is $10. So that would be $1,850 as the price change. However, there's also a mini contract, which you should be aware of as well there too, where every dollar is $500. So both of these contracts give us choices when it comes to trading crude oil. You can trade the full-size contract, and if you haven't traded it before, but you are interested in trading it, the mini contract may be something for you to look into. In the grain markets, corn is the one that did firm up here a little bit. It did trade up above this bullish level. And in this market, the difference between the bearish level and the bullish level in corn is what is that? That's 84 cents, and each full penny is $50, so that's $4,200 per contract would be the dollar value. And again, I'm just giving you that as a reference to get a feel for it. Now, in this market, you could also trade a mini grain contract, which is 1/5 of the size of the full-size contract. So again, you have choices. You have it in metals, you have micro contracts, you also have it in currencies, micro contracts. I'm mentioning this because if you're thinking about trading futures and you haven't done it before, but you have your ideas and your strategies in place and you've done the research and you want to begin, these micro contracts and mini contracts may be the place to start. Well, that concludes today's market studies. Looking forward to being with you again, and in the meantime, take care.